Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 4th of June, 2019. Thanks for joining me again this morning, at least morning my time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Those of you who are watching the Trader Bite on Periscope, the reason some would do that is because it's much more portable, but also it is not, Periscope does not support 1080p, so it's very hard to see what the numbers on the charts are. It looks fuzzy and all that stuff, but at least you can have it on your smartphone. Again, if you want to watch the broadcast in a higher resolution, YouTube is the way to go. This morning, the market has had a risk on sentiment. The S&P is trading higher or above yesterday's high or the last 2 days high. The overnight high has been 2770, currently trading just a tick below. It's been harassing this liquidity that's been here all night at the 2770 again and again. So it's creating a wedge up there, likely to break to the upside. Um, But other than that, we're seeing the DAX popping pretty strong, 1.57%, up 184 points this morning. The Euro Stox is moving with it, up 1.22%. Then the small caps, which actually yesterday were relatively stronger than the Nasdaq and the S&P. There goes the S&P breaking through the remainder of that liquidity at 2770 and pushing through as we would expect. Again, double tops, triple tops show a weak high as opposed to the traditional thought that double tops mean good resistance. The first time, yes. The second time, probably not. The laggards today are the bonds down 26 ticks, and the 10-year notes down 15 ticks, 14 and a half, 15 ticks. Gold is down 60 cents, trading at 1,327.30. Gold has rallied quite a bit over the last few weeks. So that's where we stand. That's where we stand this morning. Allocation is to risk. It seems throughout the overnight session. We'll look at the order flow overnight. Clearly drifting up and colliding with what we perceive to be resistance, and then it just continues on. So there's a fair amount of appetite today to buy. Let's take a look. Excuse me. Sorry, it's a half cough. Let's take a look at what we. Well, let me just take a look at the calendar this morning. This morning we did get a few releases out of the Eurozone. Inflation, or the unemployment rate's a little bit better at 7.6 versus 7.7. Inflation rate at 1.2 versus 1.3. Core inflation at 0.8 versus 0.9. So it looks to me like the numbers are pretty good. GDP out of South Africa, just an absolute whipping there. GDP out of South Africa for Q1 came in at negative 3.2 versus the expected negative 1.7. It basically doubled. Um, what was expected. I believe they're in a lot of trouble there. Also, industrial production in Brazil came in at negative 3.9 versus negative 2.8. Just seeing these emerging economies really taking a beating. Also, this morning we're getting Fed Chair Powell speaking at 9:55 Eastern, 9:55 Eastern, 8:55 Central, 25 minutes after the open. We get factory orders at 10 Eastern, and we get API crude oil stock after the close today. Is this calendar right? Let me see. It looks like the time zone may be off. Just one second. Yeah, no, it's correct. So that's where we stand. This evening, we get at 9:45 Eastern, we get China's Kaizhen Service PMI. Don't know how to say that word. Prior is 54.3. This missed like a few years ago, and it caused a big drop. That's where we stand currently. Let's take a look at what was expected yesterday versus what we got in our review segment. Yesterday, the primary scenario is that we're likely to drift down into 2743, find a base somewhere in there, 2743, 2740, and and then turn up into the range. The expectation was a test of 2768, which did not happen. What did happen is scenario two, where we poked into the prior day's range, moved down towards 2731. I believe the low is 2728-ish, um, and then turn back up into the range. Here's what the action looked like. Well, let's look at it on the 15-minute, because here's what the action looked like. Push down into 2734, pick up to 63, fall off, and then we had some news out of Fed's Bullard right here, where he announced that he would be, given the trade war situation and the economic figures, that he would be for a rate cut. The market took that very well and jumped from 2742 all the way to 2756. About 14 points came right off, and then the auction proceeded to continue as if nothing ever happened. And we ended up pushing down to 2728. Remember, 2731 was expected to be tested, and we expected to finish into the prior day's range, where the market actually closed right on top of the low of last Friday at 2750. So overall, scenario two played out. Yesterday, there was quite a bit of struggle from both sides. It looks like sellers just couldn't get it done. And there was quite a bit of activity from both sides. The volume was relatively high, 1.87 million contracts traded with a double distribution profile with a clear balance zone down here. Now, remember, I talked about the importance of this 2737 area, and we're likely to get chopped up in there, and we did. And look at where the balance is. The point of control is at about 2743 or so, with the MC point of control 2737. Now that seems like a big difference, but in the bigger picture, we basically balanced yesterday on top of the MC point of control from the beginning of 2018. Let's take a look at that on the bigger picture. I wanted to spend a little bit of time today just making sure we're keeping tabs on where we are overall. This is that MC point of control 2737, really big area, and we have moved down into it yesterday, put in a doji for the day, and are bouncing higher. And it looks like it's potentially a reversal point. We didn't pull back to the 38% of this move, which was just below the 27.27. Another key area, the 38% is at 27.25, and you could see that we are still below the 200 moving average. This is actually a 20 moving average, not a 200. Let's relabel this. So we're still below the 200 simple moving average. Not that I trade off of it, but it does give an indication of what everybody else is seeing. And we're trying to clear, the market's pushing to clear this low volume node area over here at about 2760. So this is where we stand. So, given all the selling that's going on, and the bears coming in swatting at the market, mauling everybody that's talking about that this is a potential pullback. This really is just a pullback. We have not exceeded anything significant, um, significant just yet. This looks like an ordinary pullback in a rallying market. Yes, we are about 200 points below the high, but overall, I'm not seeing a danger that that the buyers are done. Okay. Um, so that's what we have. Yesterday was a neutral day that finished in the middle. We finished above the point of control to continue overnight. We went sideways for most of the overnight session, just 11 points. The Europeans came in right in here, and Europe has been rallying since then. So we're in this nice channel that keeps pushing higher. Look at that profile overnight, triple distribution, very pretty. Overall, the market is testing and battling in three different areas and continues to move. So it's been quite orderly in the overnight session in that it consolidates, pushes, kind of a bull flag type of scenario. That's what we've got. The overnight session had twice the volume, the most recent average volume, and it's pushing right into that gap we left behind from last week. Okay, so that's where we stand. As far as what we're expecting for today, let's clean this chart up a little bit. What are we expecting for today? Really, I don't know. Can you tell me what you're expecting for today? No, I'm just kidding. So we're above the key 2787, 88, 2767, 68 area. My expectation today, given that we're pushing into another area of balance, if we look above, we see that we have what is a micro composite down here, these 2 days on top of each other. Let me fix this. So we're moving from one micro composite into the next. This becomes a key target right here at 2704.75. And so overall, I'm expecting that we're likely to open with a burst higher. I'm expecting a response back into 68 and potentially into 60 before we bounce back up and start drifting into 2700 and 2704 to hold steady. I expect us to finish higher today. I expect a reversal to take place. Why? Because yesterday it really tried hard to push lower, and it's leaning against a really important area, 2737, and the buyer successfully stepped in and bought up what must be considered a bargain at bargain prices in the 2737, 2740 area. And we're likely to start drifting upwards as these prices are, into 2700 are likely to be seen as relatively cheap. Now, we don't know what tweet bomb is coming and from where. The Chinese released a statement this morning that caused the market to pop higher. It says that the China Ministry of Commerce reiterates stance that U.S.-China trade dispute should be solved via dialogue and based upon mutual trust. Hopes the U.S. will meet China halfway, that it is common to make revisions and suggestions during trade negotiations. You can see that right there that the stance is to extend an olive branch, and the market likes that. And for that reason, we saw this pretty good pop right here. We saw this pretty good pop on that news release right here. Wow, that is an awful circle. On this news release right here, it's 2758 to 2769, and it has not pulled back. It has not pulled back. It has held support right there, and continued to push. This is the liquidity I was speaking about. It's been sitting there most of the night at 2770, and we pushed up against it again and again and again and again, and we are now through it and into the gap zone. The gap zone mid is 2773. That's what it looks like. It looks like overall the market is likely to continue to squeeze higher. Look at this. Look at this push. The yellow line are the last prints. This is the reopen right here. After the session closed, we dipped down, and then we've been rallying ever since the European session started. We see the volume, the dots there all of a sudden start appearing, and despite every effort to push lower, sellers are not able to hold back buyers, and it continues to drift up. The expectations for that to continue into the session today, but initially the expectation is that the inventory is long. We're likely to balance out a little bit at the beginning before we continue higher. So again, open, drift lower into the 2760 area. Would love to get some 2760s, 2762s long. Looking for an impulse higher to push back into 2700. 20, what am I talking about? 2784, I said 2704, 2784 to balance out over here and then hold steady into the close. Okay. Again, traditionally Tuesday, a relatively historically more volatile day. The secondary scenario is that we do drift up, push towards that 2784 and get an impulse down. If we get an impulse down, I'm expecting that the target is likely to be this MC point of control at 2753 before we do find balance and hold steady in here. Even so, even if it does this, we'll still likely end up with a higher point of control, higher high, higher low, and we are starting to establish our first day of one-time framing up, and that's what things look like. Let's take a review of the heat map again. So those are the two key scenarios. I'm not expecting a trend day at all, but who knows? The market does what it does. Let's take a look at how the order flow is stacked this morning. Look at that liquidity that's come in and just sitting there. Remember, this is the area I'm looking for a bounce from, and it just so happens to get a ton of liquidity right now. I don't know that that's real and it'll stick around, but somebody's stacking a book right there. You can see those orders come in one after the other. Click, 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 click. Right? See them as time goes by. Very interesting. It's a manual order, that one. The next key area up, 2775, another strike zone, and then 2780, another strike zone. But these, the 2780 has been there a while. The 2775 has not. It started sometime a couple hours ago, and it's not really, it's not something that's been sitting there all night. 2780 has. So that's what's above, below, again, 2760 to 6250, 63. So this morning I'm going to be looking to see what happens. So here's the key with this order flow stuff, right? Order flow is tricky because people who are kind of positioning themselves play the book a little bit. As the market moves down, we want to see this hold steady, right? It's already white, so it's not going to get any whiter. We want to see this hold steady, and then we want to see some collisions come in here. We want to see it try to bust through, and is unable. If that happens, I'm going to be loading up long, and looking for a turn back towards 70 as a key target above. Once we do take the turn, and then start working whatever the overnight high is, shooting for that. We have some singles up at 76, and then overall, I'm not really anything above 76 is going to be considered gravy, although 2784 would be sweet. Anyway, so that's how I'm looking this morning. Good luck today, and I'll catch you tomorrow morning. See you later.